Welcome, D-Traders. It's me, Kate Stichin, and you are watching a recap of the Asian session. Risk appetite revived on Wall Street after the release of the US fresh macro stats. Asian stock indexes kicked off Wednesday with a rise as well. Although recession fears have abated, they have not completely disappeared. Moreover, strong US data may signal further tightening. Upbeat reports on the new home sales and durable goods orders showed the resistance of the US economy. So, the Fed might continue raising rates given the strong economic indicators. For this reason, cautious optimism prevailed in the Asian trading. There is another reason why traders are also reluctant to take extra risks. As I mentioned yesterday, the ECB forum on the central banking is now taking place in Sintra. Today, Jerome Powell, Andrew Bailey, Christine Lagarde and Kazuo Ueda will deliver speeches. Top financial officials are sure to give more comments on their future steps on a monetary policy in their remarks earlier, and they have already warned that the key rates would probably remain high for a longer period of time. The US dollar experienced a roller coaster ride in the morning due to the cautious optimism. It was moving in a wide range of 102.40 and 102.70 during the Asian session. In addition, after rising for the last 2 days in a row, the yield of US government bonds went down, and this is quite bearish for the greenback. At the end of the Asian session, the US dollar index fell to 102.50. By the end of the month, it's expected to decrease by about 1.5%. Early Wednesday, the US dollar was also bolstered by media reports. The US government is considering new restrictions on exports of artificial intelligence chips to China. For China, whose industrial profit fell by 18.8% in the first 5 months of the year, this is bad news. In addition, the People's Bank of China fixed the yuan exchange rate much lower than expected. Investors are confused by such a move, and they wonder whether the Chinese regulator really wanted to slow down the depreciation of the national currency. In any case, the yuan weakened considerably. As a result, the US dollar is trying to resume an upward movement, while commodities are growing. While the tech sector in the United States is declining on the news about the export restriction for China, shares of Japanese tech companies climbed. The Nikkei gained 1.5% amid growing stocks of Tokyo Electron and Advantest. The Japanese stock market is benefiting from the weak yen. A lower exchange rate of the yen is advantageous for the country's export-dependent industries, and it makes local assets more attractive to foreign investors. The yen has almost reached a 15-year high. It lost momentum due to a strong commitment to aggressive tightening by the top central banks. Japanese financial officials again conducted verbal interventions to boost the yen. In the morning, Vice Minister of Finance for International Affairs Masato Kanda said that the authorities would take an appropriate response if moves become excessive. Japanese Finance Minister Shinichi Suzuki also made a speech today. He warned that he would respond appropriately if there are excessive moves of the foreign exchange market. Kazuo Ueda is scheduled to deliver a speech at the Banking Financial Forum in Portugal. However, nobody expects remarks about policy changes. Traders are concerned that the Bank of Japan could conduct a currency intervention, as it did in October last year. Back then, the regulator used a large bulk of its foreign exchange reserve to buy the yen. As a result, the dollar-yen pair collapsed from a high of 151.90 to 144.5 in just a few hours. However, as long as the Bank of Japan maintains its ultra-loose stance, a rally looks unlikely. The yen advanced on a Wednesday after verbal interventions from financial officials. Shortly after, the pair slid into the upward range of 143.70 and 144.30. At the end of the Asian session, it was already trading at 144. Sellers do not lose hope to see its biggest growth since February of this year. The yuan is still hovering close to its 7-month level. Yesterday, it approached 144.18. It needs to break through 143.30 and 142.80 to begin a downward movement. The Aussie slid sharply to the lower border of the range of 0.6620 and 0.6690. Apart from the fall in yuan, it also lost ground due to a drop in consumer prices. In May, inflation in Australia eased to a 13-month low mainly because of the steep drop in fuel prices. Core inflation, which excludes energy and food prices, decreased as well. It means that the Reserve Bank of Australia may skip the rate increase again in July. The Australian dollar tumbled below 0.6630 due to such expectations and a stronger US dollar. However, at the end of the Asian session, the Aussie was able to recover as a commodity currency to 0.6640. The New Zealand dollar extended its losing streak. It slipped to its 2-week low of 0.6122 and moved even lower to 0.6094. The fall is taking place amid the visit of a New Zealand state delegation to Beijing. Yesterday, New Zealand Prime Minister Chris Hopkins held talks with the Chinese President Xi Jinping. Following the meeting, the Chinese president said that both countries should promote trade and investment. However, China's economic prospects continue to deteriorate due to sluggish demand and weak exports. The government has not taken any action to stimulate the economy, and the Kiwi dollar pair was moving in the downward range of 0.6087 and 0.6170. I hope your trades are extremely lucrative today. To make your trading even more profitable, hit the subscribe button and watch our video reviews. It will help you keep close tabs on the market developments. See you in a few hours.